Hello and welcome back. If you've been with us for the last 2 hours, welcome. If you're just joining us, you may have noticed that we're about 15 minutes late. We've had some technical difficulties in our first session, but we got them out of the way there. So we're good to go going forward, but we, as I'm sure you know, we need to make sure we maintain 50 minutes per session so we can offer CPE credit. So we're trying to catch up in the breaks between sessions, but it's going to be a little while before we've caught up on that 15 minutes that we're behind. So stick with us. We're glad you're still here. This session is called it's sales tax. It's, oops, sorry, turn to the right. It's solving real-world sales and use tax issues. I'm sorry, I was on the wrong page. And I'm joined today by Rachel LeMieux and Ray Bigley, and I'm going to have them introduce themselves in just a moment. But first, I have a couple of little housekeeping issues to go over with you. So I'm Gail Perry, Editor-in-Chief of CPA Practice Advisor magazine. We are here because of our sponsors. So I'd like to briefly thank all of our sponsors who make this event possible. I'm just going to read you the list real quickly. It includes BQE Core, eFileForBiz.com, Paychex, CPA.com, ADP, Xero, Chase Inc., Wolters Kluwer, Intuit, Gusto, Canopy, Alvara, and Sage. And so we thank all of them for making this event possible, and we particularly thank Alvara for making this session possible. As you can see, Alvara is the sponsor of this session, and we're really happy that they're here with us to help us present the latest information on sales tax to you. We will be offering CPE credit for this session. There are 3 CPE codes that you need to write down during the course of the session. They'll be presented to you one at a time. You'll need to write those down. That's our verification that you actually attended the session. I'll call attention to them when we show them on the screen so you won't miss any of the codes. At the end of the day, you'll click the CPE link at the top of your screen, the tab at the top of your screen, and it will take you to a form where you can fill out all the codes for all the sessions you attended and receive your CPE credit. So if you need to reach us for anything during this session, it's info@ensuringsuccess.com. You can find us there. And also our hashtag is DecemberCPE. So right now, I'd like to have Rachel and Ray introduce themselves briefly before we get into our session content.
Ray?
Yeah, I'm Ray Bigley with Alvara, I'm Vice President. And today we're going to talk about sales and use tax, but Alvara does excise taxes, communication taxes. We do VAT and GST globally, so I'm sure we'll touch on parts of that, but today we're going to focus on sales and use.
Thank you. My name is Rachel LeMieux, and I am a partner at the public accounting firm of BDO. I've been doing state and local taxes for about 36 or 37 years now. I started in my career at the Washington State Department of Revenue, so I have both kind of a government and a non-government perspective on how to help taxpayers or clients comply with state and local taxes.
Excellent. Thank you so much, both of you, for being here.
Yeah, absolutely.
So we are going to talk about sales and use taxes today, but I think in the past year, everyone's heard the name Wayfair tossed around quite a bit, and many people may or may not know what it is. Can you just tell me in a nutshell what is Wayfair so we can move up to speed with that, and then we'll move forward?
Well, Wayfair was a United States Supreme Court case that was decided on June 21st of 2018, and it essentially changed the nexus concepts for how you create nexus for sales tax purposes. It's the biggest change we've had in state and local taxes in a number of years. And essentially what it did is it didn't get rid of the physical presence laws that were out there in order to create nexus in a state, but it added another layer of nexus creating activities, and that's called economic nexus. And Wayfair was a South Dakota case, and South Dakota had passed laws that said, you create nexus in our state when you have a certain volume, number of transactions, or a certain value, the number or the value of transactions you have in our state. That went up to the United States Supreme Court, and South Dakota eventually prevailed. So now you can create nexus by physical presence in a state. You can also create it by the number of transactions you have. Most states, when they adopted Wayfair initially, did exactly like South Dakota did. If you have 200 or more transactions in a state, you can create nexus, or $100,000 worth of sales in a state. And basically what it did is it said you now have to register and collect sales taxes on any taxable product and services that you sell into a state.
Yeah, and for a small business, you may have just been collecting tax in the state that you had physical presence before. And because of Wayfair, now you have to collect tax in multiple states. And we'll talk a lot about the nuances of what states are doing to adopt to this new way of doing and collecting sales tax.
So is that the end of the story on Wayfair? Is it over now? Can we move on?
We are never going to be able to move on from Wayfair.
Yeah.
Wayfair is just the beginning of the change in how states reach out to get what they believe is their fair share of tax revenues. Again, Wayfair started the process, and states, as a result of that, rapidly implemented South Dakota-style rules. They've since then changed those. They've added new complexities to it, and now, unfortunately, income taxes are starting to come into play, state income taxes, and states are looking at whether they should implement Wayfair-style nexus requirements for state income taxes as well. So we are not even, I think, out of the beginning phase. It happened in 2018. We're only 2019 right now, and I can see numerous changes into the future that will impact the way businesses comply with state taxes.
And from an accountant's point of view, it's no different than when they make changes to tax laws and individual or corporate income tax. It doesn't make it simpler. It may seem as if it does from your client's point of view, but from the accountant's point of view, it makes it even more complex because you still have to look at the old laws and adjust the new laws, our current laws, to your client's requirements and needs.
So we've talked about sales taxes before, and you guys have thrown around the term marketplace facilitator laws. Mm-hmm. What is that? What does that mean, and what does it have to do with all this?
Well, I'll let you talk about it, but it's the state's reactions to Wayfair. And we should mention that Wayfair is a company, it's a marketplace, and perhaps you guys have bought stuff and shopped on Wayfair. If you watch the Hallmark Channel, you see a lot of commercials for Wayfair as the company. But we refer to it as a Supreme Court case. And perhaps you could talk about how states have adopted these marketplace rules.
Right. So when Wayfair was first passed, again, what people did was they had to start complying based on a value number or a volume number of transactions into a particular state. And states, while they implemented those, decided to roll forward with what are called marketplace facilitator laws. And what those laws are going to a marketplace like Amazon, like Etsy, like Wayfair, things like that, and they go out and they say, you are responsible, Amazon, for collecting the sales taxes on sales made through your platform. So states, in an attempt to make sure that they were getting their sales taxes, because smaller businesses are still having a hard time complying, they went to the marketplace and said, we're placing the burden of sales tax collection on you. And so really there are four types or four factors you have to look at, right? If you're selling, you have to look at four factors as to whether you fall under these laws. And one is a remote multi-channel seller. That's somebody who does not have nexus in a particular state, but sells through a marketplace, sells through their own website, and also may have a brick and mortar store where they're still selling at point of sale. Falling under a marketplace facilitator law would say, as the seller, right, have to pay attention to my multi-channels. How do I sell? And do I reach the thresholds that require me to collect sales tax? And does that state say the marketplace must collect on my behalf? And if that's in fact the case, you have to keep track of 3 different revenue streams for purposes of collecting your sales tax.
Yeah, and I think that's the biggest change for your clients is that now they have to keep track of where they're selling and what platform they're selling on. Because if Amazon's going to remit taxes in the state of Washington or wherever, then you don't want to report those and pay those again yourself. Right. But you want to record that it's been paid, and especially if you're selling into that state, like you said, through your own website, or you're doing invoicing through your accounting system or whatever it may be. Right. All those combined are what is used to meet a threshold, not just any individual channel itself.
Right, and of course, just like Wayfair, when states started to adopt Wayfair, they adopted, could it be uniform? No, it could not be uniform across all 45 states that implement sales taxes. And the marketplace facilitator laws are no different, right? 35 states, I think, as of today, have implemented such laws, and no two are alike. So it's while states think they're getting their sales tax dollars more efficiently, the burden that it has placed on businesses to comply with the many facets now of what you have to keep track, that has increased the complexity.
So before we move off of legislation in general, we've had all these changes. We've had Wayfair, there's marketplace facilitator laws. Is there anything more that's coming on the horizon that we can expect, or can we settle down?
Well, I don't think you can ever settle down as it relates to complying with your state and local taxes. Yes, again, as I mentioned earlier, states are now looking at whether they should change their income tax reporting requirements based on economic nexus laws. And so a business, and this is something at BDO that we talk about all the time, is understanding your total tax liability. What happens if you register because of a Wayfair law and now you're reporting in that state, or the facilitator is reporting taxes on your behalf? What has just happened to other taxes you may owe in that state? And so it's really, that's one of the changes that are taking place, as states look at it, they figure out what's working and for them, what's working for them, and they start changing laws to capture more tax revenues. It backs up onto the business itself on how it needs to comply. And again, so looking at your total tax liability is absolutely important now to survive and to thrive in your business.
Yeah, and states have the information now. If Amazon is paying on your behalf, they know that you're selling one way into that state. And the states are smart enough to realize that companies sell in multiple ways, or omni-channel ways, like we talked about. And so they just have a point of reference that they build out from, and try to see if you're selling other ways there. Yeah, it's fascinating.
Yeah, so I think we have a slide to show you that is a map. Do you want to tell us about this?
Yeah, well, this slide talks about states that have adopted marketplace rules today, and like California and so forth, they're going to adopt it in the future. And at Avalara's websites, we have sites that talk about Wayfair rules and laws, and then we have maps that talk about marketplace facilitator laws, and states that have adopted them, and states that have already passed legislation and shall adopt them in the future.
Right. If we can we back up to that map by any chance? And while you see a lot of teal color, I guess that is, it would lead one to believe that you have uniformity in how these laws are implemented, and really you have zero uniformity in how these laws are implemented. So, for instance, Arizona, right, is different than Alabama, is different than California. And when I say different, what I mean is, how do you calculate, right? How do you calculate that $100,000 threshold? Or is it a $500,000 threshold? So if you have a marketplace facilitator law in a state, do you include the value of the sales through that marketplace plus the value of the sales that you sell yourself over your web? Do you have to include those to reach that economic nexus threshold? And the answer is, it's my old saying, the consultant two-step, it depends. Mm-hmm. And it's just really, really hard, even for us on this side, of helping clients. Even for us, it's difficult. But this is my job, and this is what I try to do in helping my clients, so they hopefully don't have to spend a majority of their day keeping up with the laws.
Okay, and then the other map we have is the marketplace facilitator map?
Correct. And you just have to be aware of both of them and look at both of them. And like Rachel said, each state, because it's state sales tax, is entirely different. But back to your question about change and what's going on, from a global point of view, governments are injecting themselves even sooner. It's called e-government initiatives. And it's really this notion, not so much about collecting tax, but to reduce fraud. And in Brazil, prior to sending out an invoice, you have to get an approved format, XML format that the government sends you that you use to generate your invoice that you send to your client. So they inject themselves, prior to anything going to your client. In Italy and Hungary and Spain and countries in the EU, they're after the fact. You still send an invoice to your client, but at the very same time, you're sending a file to the government explaining what's been done. So the way that we look at it is, how would this apply to the United States, or if it ever will? And it's just interesting when you look at things like that on a global basis.
So how aggressive are states becoming about collecting sales tax?
It
varies.
depends. It's an it depends answer, and it really varies. States are modernizing their systems. States share information now more than ever. And so much like we are all modernizing to, going to software-related tools to help people comply, the states are doing the same thing in terms of going out looking. Listen, it's really easy as a revenue officer to go out and start shopping on a facilitator site and see that sales tax is not being collected. That's just one way. It's easier. When I was a revenue officer, it wasn't that easy. It was by visual, actually seeing what was going on. And now you can literally go out and start doing tax discovery in that way. And then again, through audits, right? So more audits are taking place. They're finding out more and more about various companies and whether they're actually registered. So I think states, is it aggressive? I don't know if you can characterize it that way. Is it modernizing and their ability to handle more because data is available, more readily available? I think that's where we're at.
Yeah, and I couldn't agree more on the big data side. I mean, think of it from that point of view. Before, if you were a state or a state auditor, you wanted to you focused on the large companies where you could get a lot of revenue. Mm-hmm. Now, with all the data that's available, you can have a more broad approach and get small amounts of money from clients or from companies, but you get thousands of them or tens of thousands. And so the revenue could be greater.
I mean, I just recently attended a state tax conference where a Department of Revenue was starting to use data analytics and to actually look at where their time was spent and what their recovery based on that time looked like. And it was surprising to them that they were getting more money from the smaller businesses per hour than they were from the larger,
the ones that can't afford BDO.
Or they can't really afford anybody, and they're trying to do it all on their own. And so because states aren't getting, for whatever reason, state governments are still not fully funding their Department of Revenues. And so Department of Revenues have to go out and look, where should I be spending my time? So data analytics is what they look at, and that's how they start targeting, right? Now, what they're going to do with that, nobody knows, right? But if I'm an auditor and I can get more per hour in this bucket than I can in this bucket, of course, the leadership in that department is going to say, let's focus on this bucket.
And they're getting the data from the marketplaces themselves.
Right.
So from Amazon and from Etsy and
like
Wayfair.
In this map that is currently on the screen, right? These are states that can opt, where the facilitator can actually opt out of collecting the sales tax. Okay. But if they opt out of collecting the sales tax, they're required to provide information to the Department of Revenue on sales that were made by people where sales tax was not collected. Mm-hmm. And so consumers or businesses in those states get letters from the facilitators saying, you sold this to customers in our state. We've turned that information over to the Department of Revenue. So that's another way where data is being passed on.
And the other way that business is changing is, historically, Alvara is sold directly to companies. And we have tens of thousands of customers. But today, we're selling directly to marketplaces that want to comply with facilitator laws. And so the marketplace themselves, in order to provide a better service for their sellers, need sales tax capabilities. Mm-hmm. So, rather than, selling one customer at a time, you work with Amazon or you work with whomever, and you gain hundreds of thousands of customers that way
Right.
that are using your ability to calculate.
Right.
All right, we're going to take a really brief break. We want to hear a little bit about our sponsor, Alvara, and when we come back, we will have your first CPE code for you for this session, so don't go away. We'll be right back.
Started out simple, didn't it? One location, couple of products, happy them, happy you. But then business grew within the state, outside, and online. And with it came the chaos of sales and use taxes. Ever changing here, there, on tax holidays with certain exemptions and with expectations of filing so many returns that suddenly everything that once appeared simple simply wasn't. But now, thanks to Avalara's suite of sales and use tax products, you can automate calculating rates, filing returns, and managing exemption certificates with just a few clicks of a button. Downloading rates tables and hoping zip codes are close enough isn't the best way to do business. So let our geolocation technology calculate rates accurately, instantly. Trying to figure out if and when products are taxable is mind-numbing. So kick back and let our industry-leading taxability database handle that for you. The possibility of an audit can make you lose sleep. We guarantee accurate calculations, so sleep on. Exemption certificates? Yeah, we can collect, store, and manage those for you. And the remittance process, taken care of. We'll file on time, every time. Best of all, our cloud-based solutions integrate with everything from your accounting or ERP system to your e-commerce shopping cart. Join the tens of thousands of customers using Avalara's sales and use tax solutions to make their jobs a whole lot easier. It's time to get back to simple, i.e. happy you. Avalara, tax compliance done right.
Well, great. Welcome back. And please look at the bottom of your screen and be sure to write down the first CPE code for this session. There will be two more later in the session, and those three codes all together, three-digit numbers, will be your ticket to a CPE certificate when this session is over, or when the day is over, however long you're going to stay with us. We hope that you're going to stay with us all day, because we're here and you should be here too. And again, we do apologize for the delay in getting our sessions started. It's the beauty of being on a live broadcast. You know, we had a little control over the fact that we got a late start this morning. But we're making sure all of our sessions are still 50 minutes, so they will all qualify for CPE credit. So back in my pre-magazine editor life, I was a state and local tax accountant for Deloitte, and I had a client at one time that when I came on the job, the client was about 10 years old, and they were doing business in 50 states, and they had filed income and sales taxes in 5 of those states. So we started down the path, I started down the path of basically trying to catch them up with all of the states where they had liabilities. And at that time, this was quite a while ago, but of course the states didn't even know about this company, didn't know that it had nexus or that it was even doing business there, but we wanted to make sure they knew we were trying to make things right. I found the states to be extraordinarily negotiable. They were just so happy to hear from us. Like, okay, we've been doing business for that long and you're actually coming forward, you know, and it was easy to remove penalties and interest and even in some cases negotiate the total amount we owed. I have a feeling that those good old days are kind of gone. Is that the case?
Yes, as a tax practitioner, I have unfortunately experienced this change, right? So over the years that I've been doing this, and you can kind of like put it on a timeline where, yes, that was the case. States were very happy to have you come forward. They would negotiate whatever they could in terms of maybe even forgiving the past that you're going, you know, on a collection on a going forward basis, or very reasonable payment plans without putting liens out there so that, you know, as you were trying to run your business, if you did a credit check, right, those things wouldn't be out there. Unfortunately, states are getting more and more strict. And they're saying, no, we have to follow the law. That is, in my opinion, a direct relation to state budgets going down. And as state budgets go down and they need to get more revenue, they become less and less lenient, right? They become more and more strict in terms of what they're willing to forgive. Now, if you come forward voluntarily, right, there are the voluntary disclosure programs, VDAs, and those are, in essence, a lenient way and limiting how much they look back. But if the state finds you, there's usually a very limited leniency. And it's unfortunate because obviously we don't want businesses to go away. If businesses want to come forward and comply, we ought to be doing everything we can to keep them going. It's employees, it's revenue, it's a lot of different things, right? Yeah. But again, this change in becoming more strict is, in my opinion, a direct relation to state budgets being reduced in size.
I mean, and that's what it's all about, huh? State revenues. I mean, it's state sales tax. And the fascinating thing is we talked about the big data side where the states find you. Well, what are some other ways that states find non-collectors these days? I mean, I think we chatted over the break, your competitors. Your competitors report you. And you go, well, why would they do that? I mean, it's because they feel as if you have a competitive advantage, and they've been caught, and they're gonna make sure that you pay taxes.
Interesting.
I once had, this is a real story. I once had a client who had been audited in multiple states, and of course was found to owe back taxes, and so in fact went through the process of getting compliant, but his competitors were not. And so he engaged my firm to essentially provide him with information on what I'm going to call the tattletale line, right? To pick up the phone and do an anonymous tip that somebody wasn't collecting tax, and then all of that kind of thing, because he was tired of not getting business anymore because his prices were lower. They really weren't lower. They just had a sales tax on top of them. I had another client who was a startup technology business. They finally hit it big, right? They got that thing where they went from burning revenue to making lots of revenue really quick, and there was a press conference. And that's all it took. And states started.
Exactly.
States started him because he hit it big, right? Those are the types of things that happen, and savvy revenue officers who are paying attention start sending out business activity questionnaires, which of course you have to comply with.
Of course.
And disgruntled employees.
Oh yeah.
Especially in in a small company, in your finance department or whatever it may be. I mean, we've experienced that as well.
Correct.
So if you're the accountant and you've got clients who are doing business in multiple states, what kind of requirements do they have in terms of just even registering, getting the whole process started?
Yeah,
that's the $1 million question, right? It's a question of requirements versus abilities, right? So there's always going to be a requirement. State law is going to provide when you've created nexus for purposes of having to, and how, right? When and how you've created nexus for purposes of needing to register and collect. But if you're a smaller business that is maybe a 2 or 3 person shop, but you have the product that everybody wants, you don't necessarily have the resources available to you to immediately start complying. Immediate compliance is really tough, and it's costly, right? But states don't necessarily care about that, right? So that's where we move into consulting about automated solutions. How can you continue to move forward with your business, but at the same time comply with the myriad of laws that are being passed? I mean, just since June 21st of 2018, the laws have changed multiple times. And for the small business, it is tough, right, to keep up with all of that. So.
Yeah, and I think that if you go back to where Congress was first addressing this issue prior to Wayfair, a number of years before Wayfair, the states were talking to Amazon. It was before Amazon collected tax. And at that point, Amazon mentioned Alvara. They said, well, now there's an automated way to collect tax. It's not the burden that it used to be on everybody. But to Rachel's point of view, regardless of automation, you still need to be knowledgeable and understand what's going on.
Right.
And as change happens, that just becomes more of a challenge. And I have a neighbor. I live in the Pacific Northwest in Seattle, and there's boxes coming in and out of their house. They're selling $1 million a month through Amazon, fulfillment services and Amazon worldwide. Now, that used to be a decent-sized company. Huh? It wasn't out of your house. But commerce is completely changing, and it's bringing up a lot of business opportunities for people, but also a lot of tax consequences on them as companies.
I will say that one of the things that's come out of this from a consultant point of view is people, oh my gosh, I now fall under these economic nexus laws. And what you do is you go and you do what we call the nexus study, right? And we ask them about their business, and we go back 3 to 5 years, and we find out they've actually had nexus for quite a while in a state. They just didn't understand that inventory stored in a state created a physical presence for them. That one time they stepped in that state to visit a customer created nexus. So what we're finding out is, even with economic nexus, we are finding out that people have had nexus for a number of years, and that's just been tough lessons to get out there. But what I really like is when you sit down and you start talking about what are the ways that we can mitigate your issues, voluntary disclosure programs, amnesty programs, things like that. If you're willing to be proactive, you can protect your business to a certain degree, right? And keep it there long into the future.
So from the accountant's perspective, what does this business look like in terms of providing service to your clients to help them make their way through all of this?
Well, we start, the way that I like to do it is we start with asking just a lot of questions. We send a nexus questionnaire. We figure out where is that nexus. And then we move on to calculating what's your risk, right? How much do you owe? When do you owe it? And then we move into what makes sense in terms of registering and going forward with the state. These are long projects sometimes, but the bottom line is that we want to help businesses stay in business and not get that big tax bill that they couldn't possibly begin to pay.
And and I think the thing that's important, I caution everybody, just don't jump out and register for sales tax in the state, because there's a whole myriad of other things that happen to the income tax and corporate tax and all those things that that businesses have, franchise taxes perhaps in California, and you just need to be aware of what those are. So talk to your accountant. We caution everybody to do that. It's a prudent thing to do.
And it's prudent. And so I hate to say that we ask people to slow down, because slowing down has consequences as well. A state could catch up to you. It's more like take a step back and look at it more globally. Again, the total tax liability, as Ray says, because you can make business decisions on what you want to do, but you can't make a decision if you don't understand, right? You don't understand where you've created nexus, how much money you owe, do you have an income tax filing responsibility, should you actually register? I mean, are you multi-channel seller or are you a single seller? And you're in 10 states. Are 8 of those states facilitator states where the sales tax is going to be collected for you? And 2 of them are opt-out states. I mean, you have to have the big picture.
Yeah.
And the problem is as we've progressed to where we are today in states going after revenue, it is now very complex. And I joke about this. I actually tweeted about it earlier today. It reminds me of A Beautiful Mind, when Russell Crowe, or actually his colleagues, walk into his cabin and see the wall filled with pictures and yarn going and drawings. That's almost what it's like today. And we try really hard to make sure that we take that burden off our clients.
Yeah, I think that from a business point of view, it's so easy to start a business. I mean, there's so many different ways. I mean, we talked about this earlier. There's cloud accounting systems, and there's you don't have to buy your own. Most companies don't even have to buy computers for small companies, for employees. There's storage on AWS, and there's just lots of different ways to start a business. But the regulations and the requirements are similar. You have to comply, and you're going to get to a certain size, and anymore, that certain size can happen so quickly.
Yes.
Just like the neighbor I spoke about, that the amounts of revenue that are being generated. Now, the amount of income still may be, very small, but the amount of sales can be high.
Right.
Okay. Thank you. We have another little technical difficulty. So the CPE code that we showed you earlier in this session is the wrong one. It was a session 4 CPE code, and this is our session 3. So right now, you can forget about that code. We're going to show you the first CPE code for this session, which is session 3. That should be on the screen now. You want to go ahead and write that one down. And sometimes it's just one of those days, and this is one of those days. So we're going to roll with it. And then, so go ahead and write that down. We'll just leave that up for a few more seconds. That's your first CPE code for this session. There will be 2 more. We're going to take a really quick break and have another word from our sponsor, Alvara. When we come back, we'll be ready with your second CPE code for this session, and we will see you then.
Our tax team is me. Before we had Alvara, we really weren't on the compliance level that we should have been. The knowledge of where and when you should be charging sales tax didn't really exist, and so with Alvara's help, that's one of the things that we've are comfortable now that our compliance is up to snuff. Alvara makes our business better for a couple different reasons. One is a simple thing as profitability. We could charge. It allows us to, when we quote a sales job, because most of our business is all custom ordered. So when we quote a sales job, we can quickly find out what the sales tax are, include that on the quote with the freight to get a cost that the customer could be comfortable with, that knows that that's going to be the end cost. So we don't have the oops at the end of the process of having a transaction and then having to go back and add the tax to it, because that at that point just becomes a cost out of our pocket. It's not like we make any more money, but we don't lose any money on the tax side. To me personally, the biggest gain is the compliance and the ease. I don't have to go through and manually calculate sales tax in all these different states. I don't have to, fill out the returns. I don't have to figure out when they're due or process the transactions. All that Alvara does for us, and I get kind of a one-stop shop. They do the quoting, the calculation, the reporting, and we also use the cert capture. They capture the certs for us. My overall feelings for Alvara, I guess I look at it as I look at them as my sales tax expert. I don't have that resource in-house, so I want them to manage all my aspects of sales tax. So that would be everything from, calculating, filing, and paying my sales tax. I don't see us ever moving out of Alvara just because, it's complex enough now, and I don't think it's going to get any easier. So it's just a cost of doing business now for a company our size.
Welcome back. We are going to display on the screen right now the second CPE code for this session, so please write that one down along with the one we gave you just before the commercial. That's our verification that you are attending today. And while you're writing that down, we'll leave that on the screen for a few more seconds. Rachel, you were speaking earlier about the questionnaire that you guys, your firm uses to assess a client's potential tax situation. So could you tell us a little bit more about that?
Yeah, so when we're engaging with clients and prospects, we do have that kind of automated process of sending them the questionnaire. But even before we do that, we just engage them in conversation, because face-to-face conversation is always good. And I call it my top 10 questions you ask every single client. And not all of them, in fact, the vast majority of them don't deal with taxes, right? It's about getting your client or prospect to engage and telling you about their business, because when they talk and you listen, you learn a lot about what their needs may be. So I'll talk about just a couple of the questions. One of them is, tell me about your business. Okay? Business owners love to talk about their business. And as they're talking about it, how they started, how they develop their product, how they sell their product, where they sell their product, starts thinking about, okay, I start having a little mental checklist. All right, well, they're a manufacturer. What does that mean, right? Are there credits and incentives that might apply to them? They started selling over the internet. Uh-oh, what about economic nexus? But I don't talk to those things right away. I just write it down. And then when I'm working with technology companies especially, I used to ask, what's your 5-year plan? Now you can't ask that. It's more like your 3-month, your 6-month, your 9-month, your 18-month plan. Are you building it to sell it or building it as a legacy to pass it on? All of those things tell you more about the company. And then my favorite one is what keeps you up at night? Right? Because if you ask them what keeps you up at night and taxes start to come into it, that's when you can start engaging in, here are potential solutions for you to help you sleep better at night.
So, did you want to add to that?
No.
So, so if
Wow.
Exactly.
if you haven't been doing sales tax services yet for your clients, and this sounds like a direction you ought to at least consider, either within your firm or at least finding out what your clients' liabilities or potential liabilities might be, and then deciding how you want to help them address it. How do you? What steps would you go through to try and set this up as a service in your firm? What do you need to know and what do you need to do?
Well, I think the way I look at it, there's two sides to this. One of the things I've learned about accountants is they're not going to really talk about things they don't know. Isn't that right? I mean, they're ethical and they think that way. Mm-hmm. And so the vast majority of accounting firms in the country don't have state and local tax experts in the firm. So what do you do about this? How do you satisfy your client requirements? Because all clients have these requirements. And I think that there's scales. For the smaller clients that deal with marketplace facilitator states and so forth, it's just educating yourself on which states are going to remit taxes, and then putting a process in place to work with your client to designate those revenue sources that you have, be it your own e-commerce site, your site that you're billing through, an accounting or ERP system and such. Mm-hmm. The other part of it is the compliance side, the return side. Mm-hmm. And there are tens of thousands of sole proprietors and small accountants that have done sales tax returns on their clients' behalf. And the way that they did it is they got the gross for sales, any exempt sales, and tax collected, and they went to the state website and input that information in. Well, now that small accountant now has a different business problem. Their client may have returns that need to be filed in 15 states or 10 states. And that's where a company like Alvara can help. We have software that we can provide to an accountant to do sales tax returns on your client's behalf. And so we're not selling directly to your client. We may sell calculation services to your client, but the return itself, we would work with the accounting firm to provide. And that shift is a large one for a small firm. For a firm like BDO, they have, large number of employees. They're big organizations, and they have large facilities to do these kinds of things. But for the smaller one, Alvara can definitely help.
And for us at BDO and other firms, large or small, it's about talking to your clients. What makes the most sense in terms of automating their compliance now that, right, just Nexus is created almost everywhere now. And so it's really sitting down and talking with them. What do they currently have, right? What software system do they already have for financial purposes? And then, do they have staff? Are they planning on hiring staff? What is the complexity of what we call their catalog, right? How many products are they actually selling? which adds a whole nother complexity to this, which is if you're selling candy, for instance, candy's taxable in some states, but not in others. You have sales tax holidays. You have school holidays, right? Where up until a certain point of time, your jacket you're buying for your kid is taxable, but during this one period of time, it's not taxable. All of these bring up complexities, and we sit down and we say, probably time to automate. Now the question is, which is the right automated solution for you? And so where we can really come in is helping our clients understand what's the right automated solution, and then working through that and talking to Alvara and others out there in bringing them in to actually help implement. Because Alvara has a great background. Their product catalog, everything that they've got in there will help, and so that the client doesn't have to learn it themselves.
Yeah, and then, we've talked about this in a few different times, but, understanding where they want to collect tax. Alvara has ability to collect if you've developed your own website or your own e-commerce site.
Right.
We call it API connection, and you can take advantage of the product taxability and the rates and rules. And when people think of sales tax, they think in terms of rates. It's 10% or 8% or 9%. But to your point, the complexity really lies in the product taxability rules, the underlying, and I think there's multiple 100,000 across all states where, a candy bar is taxed differently in one state or the other. If you put flour in it, it's different tax rates than if you use something else. Or if you buy a dozen donuts rather than 5 or 4, it's taxed differently.
Or you can eat it on site or take it away.
That's right.
How is that defined? It's crazy how complex this world is. I used to say, I would like to work myself out of a job with my client. In other words, I want to bring to you, get you set up properly, and then I want you to not have to call me all the time. I no longer do that anymore because it has just become increasingly complex. And so I always want to be that resource, that person, the trusted advisor that they pick up the phone and say, we're going into state X. What are my requirements now? What do I need to know about?
Okay, we have one more really brief break to take, so we're going to take that right now. Right after this break, you'll get your third CPE code for this session, and then we'll wrap this up. So stay tuned. We'll be right back.
With Alvara, you can automate your sales and use taxes with just a few clicks of a button. Instead of manually calculating sales tax yourself, Alvara tracks the proper rates, rules, and boundaries, calculates the appropriate sales tax, and applies them to your orders. As for filing returns, Alvara manages the entire process and files on time, guaranteed. You'll receive detailed sales tax reports broken down by all applicable tax jurisdictions, showing exactly what you collected and where it was remitted. And guess what? That's it. One single solution to remove the burdens of sales tax and returns so you can get back to business. Do what you love and leave sales taxes to us. Alvara. Tax compliance done right.
Hello, we are back, and on the screen you will see your third CPE code for this session, so be sure to write that down along with the other 2. Those 3 codes make up the verification you need that you attended this session. So hang on to those, but stay with us for the rest of the day because we have lots more good stuff to talk about, and we're not done talking about sales tax. So the more you talk, the scarier it sounds. In terms of doing sales tax as an accountant serving clients, because there's so many rules and it's different for everything. So if you were attempting to move your practice in this direction without talking about specific dollar amounts, just in general, what are some options for how you could price this kind of service? Because it doesn't seem like it's the sort of traditional sort of service we've been used to offering.
I'll address kind of the consulting
That's
side,
right.
and you can
Sure.
address more of the software side. From a consultant's standpoint, I think we have to look at what is it that the client needs, right? I take a look at, say, we're going to do a Nexus study. Well, Nexus studies are becoming very much a commodity, right? So what's the appropriate price for that? I tend to think these days that rate times hours may not be the best way to go. And instead you're looking at what do I need to do, and in what steps should we do it? Because we got to find out what the problem is, right? That's one price. Then we got to figure out what the problem is. How much did that problem create? And then from there, what are we going to do about it? And so we used kind of a phased approach in how we approach this in the Pacific Northwest, all because we may do this Nexus study for a small amount of money, and in the end find out that there's nothing that needs to happen further, right? So we haven't gotten into a multi-$1,000 project or something. But then when you move into calculating the problem and then what you do about the problem, those things increase in complexity and therefore increase in price. Now, my firm does a lot of different things. I've built my practice on what we call fixed fee pricing and value-based pricing, all to determine what's the value we bring to the table. And sometimes rate times hours isn't it, because sometimes the rate times hours isn't worth the product that you're giving. And so you just have to understand that. I want the business, I want to be able to help my clients and the prospects, and so we work that out, right? And again, I wish I could say rate times hours, but it's really not that way.
Yeah, and from a software point of view, the way Alvara approached the market, and it really set us apart, is we did these integration, or we call connectors, to accounting or ERP systems. So we connect with QuickBooks all the way to SAP and Oracle Financials, and we have very small companies that just sell through an online, their own online site, to global companies that sell worldwide. And that ability to automatically integrate with those accounting systems is really what has set us apart. So if your client has QuickBooks today and they upgrade to NetSuite or Sage or Oracle or SAP, there's a migration path for them to accommodate with. And the pricing is done by numbers of transactions. And and I touched on this earlier, it's absolutely amazing how quickly companies can get to hundreds of thousands or millions of transactions in today's commerce world. It's not like you're just sending out one invoice. We just had, the Black Friday and Cyber Monday and all those days, and the amounts of transactions that are processed in those days are in the billions now. Right. And we all get boxes delivered to our house as a result of it, huh? So pricing is done accordingly, and whether you're using Shopify Plus or BigCommerce or Amazon, or selling it through your own site, there are easy ways to connect with automation today.
Right.
All right, excellent.
Yeah.
So I think we may or may not have a slide here at the end, but whether we do or not, if we do, we can display it. If we don't, that's okay. You can tell us about it. We'd like to hear just a little bit about what Alvara Crush is.
Yeah, Alvara Crush is our national conference for our users, and also for partner accounting firms that work with us. Rachel's gone so many years. Every one of those pictures Rachel's been at, and others, and there's obviously a lot on tax and a lot what our customers want. This year it's in St. Louis, so come and join us. In prior years we've had in other parts of the country, but it's a great event. It's in May. I think May 12th, there was probably up 14th. There through 13th.
14th, right?
Yeah, so I got the dates right. Boy, that's lucky.
All right.
But it's a great event.
Right, and Ray's correct. I've presented at every Crush event since the beginning, and I encourage my clients to go. I encourage prospects who are thinking of implementing a software solution. And one of the benefits that I see when I go to Crush, one is obviously to interact with my peers, with Alvara and others, but it's that interaction of business people helping each other out, asking questions. How have you handled this? What is going on? What issues have you had with Alvara? What makes something a success? And so the bottom line is I think it's a great conference, and it's only growing and it's only getting better over time.
Thanks.
Outstanding.
Sure.
Yeah. And thank you, Gail. This is a
My pleasure.
long day for you.
Thank you both for being here for a very good session, very informative. I hope our audience learned quite a bit from this. And don't go away. We're going to take a very brief break to change our set here, and we'll be back to talk about tax planning tips that you will not want to miss. So we'll see you then.
Thank you.
Thank you.
Thank you.
Thank you.